record drop in services, record drop in consumer spending, record drop in industrial production, record spike in jobless claims, record drop in regional manufacturing, record drop in consumer confidence. Stock market at all-time highs. All right, so let me say hello and welcome again to each and every one of you. Doug here with the LincolnList.com. I welcome you to the daily edition of Stock Market Mutterings, where my promise to you is always to take a grope in the murkiness. Trying to make some sense out of this market. Gonna have a tough time doing that one today. Make some sense out of this market and try to provide you with some quality trade setups. You saw the beginning. We've gone unhinged here, man. This is an unprecedented time. All that stuff that used to matter, fundamentals, common sense, throw that crap out the window, man. Throw away your charts. Start throwing darts, man. I'm just kidding. Don't do that. I'm just saying it's kind of gotten to that, to where the Fed has dumbed down the investment community. And, you know, when you got money like that with the Fed and people think the Fed's going to bail you out, there's zero fear. And I'll tell you what, this has been, I'm going to put the stat up here. I'm going to try to recall it from my mind. If I can't, let me see if I got it maybe here sitting on the other computer. This is the largest 50-day percentage change in the market. Like, this is the strongest, like 39, almost 40% over the last 50 days. One of the strongest span of 50 days of trading ever. So if you guys are part of this, you are witnessing history, that this has been one of the most vicious, not one of, the most vicious snapback rallies ever. And that's what we're in right now. And you know what? Getting back to all seriousness, this is what's unprecedented and how things have changed. When I first started trading, none of this would have happened. In fact, the numbers now are worse in many cases on many economical indicators than they were in the financial crisis. And we saw the NASDAQ at that time lose 50% of its value and took decades to recover, or more. I think almost like a long time. Let's just say a long time. Now you just don't see that. With the Fed buying this, doing the QE, the rich are just getting richer here, guys. I mean, it's just absolutely nuts. And we went off today. Market gapped and took off and just never, ever looked back. Now, some of the things that we had been talking about specifically in these market mutterings were two targets specifically, and those have been achieved, which now is going to lead me to start adjusting my approach going forward. One of those was SPY 300, and you see this move here. We kind of gapped up above 300, and to be honest, we haven't really looked back since, and now we're up here at 312s as I'm doing this after hours. 312, man, 312. I mean, overshot my target. I thought we may get 301, 303s or something like that. So it's overshot my target by 10 bucks. They often have the tendency to do this. As we always say, the market can remain irrational longer than you can remain solvent, and there's no reason that you're fighting it. The momentum is strong. And maybe what we're seeing now with this like stampede of buying, you're starting to get what I talked about months ago. If you look back, you'll see I said this months ago about they're going to start chasing this rally, and you're starting to see that stretch out. So I think we're going to get to the end of this here, at least for the short term. We need to be a little bit more cautious about this stuff, especially for you guys out there that are swing trading or holding positions. Got to be a little bit more cautious about that. I think you're going to see some sort of a pullback, some sort of a correction. Now, I'm not going to say 50, 20,000, 100% doom and gloom, but this market certainly should end up going back to 300. Now, the other one that we were talking about is the Qs. I said all-time high, most specifically over the weekend. I said, man, you know what? It'd be stupid if this thing doesn't hit all-time highs after coming back that way. There it is. Now, again, they often, and here's the thing I want you guys to know. When I'm saying correction, or I'm saying start to look, I'm just saying we want to keep our eyes on signals. We just don't want to start running into the market tomorrow and haphazardly shorting stuff. That's not what we want to do. Because, like I said, these things can overstretch their targets a lot farther than you think. So this, like I said, 301, 303 on the SPY was mine. It's 312. It can go to 325. I don't know. But I would say here really soon, this is going to taper off a little bit because prices are getting high. And I think we first start looking at things like tech names. I mean, I personally, when you're day trading, it's different. You can buy stocks in a killer bear market and do fine. It just depends on how the market is and the market internals. You can short stocks in bullish markets and be fine. It's all about scalping and picking up little small pieces here and there. But if you're looking at like swing trades, I had some Apple. This is what I wanted to talk to you guys about too. I know I said I gave everybody a free trial a couple months ago to this part-time trader program. And this has also had its best span ever. Now, some of that has to do with the market, but you know, we picked up some trades here a little while back in Apple, Facebook, Peloton. You know, these were all trades that I had gotten in prior to this big rally and really got a chance to take advantage of it. And the reason I want to bring that up is because I once offered a free trial, and I'm not going to do that again. But the thing about it, this program is only like $2 a day. And the beauty thing about it is it's actually performed really well over the last 4 or 5 years. And I started comparing it to what I'm doing in day trading. You know, I look at my results in day trading, and then I match it up with this, and it's like the work that I'm doing. I mean, it's like 2 trades a week. Sometimes, like lately, like last week, there wasn't a trade. We've just been trailing up on things like Peloton, Zillow, Apple, Facebook, the Qs. We had the Qs, and today I lightened up on you know, I sold most of that stuff and lightened up on the rest of it because I think we're getting to that spot. But the thing is for a couple of dollars, you're getting these ideas where you just don't have to trade that much. You don't have to be like a sheep following everybody all over the place, trying to scalp for pennies in crowded trades. You don't have to do that. I mean, if you're just patient and give it time, I mean, look at the results. I mean, look at it. What are you going to say about it? I mean, isn't that worth a couple of bucks? If you guys are interested in something like that, this is perfect for you guys that have a job. It's perfect if you have any money at all, like account anywhere. This is perfect. A couple of trades a week. Commissions are at 0 now. It's a simple thing to pay attention to. It's great for ideas. So anyway, thought I'd just pass that on. What an amazing month. I'll give the market some credit for that. You know, if you're long, everything's practically going to go up during this greatest bull run in 50 days. But historically, it's even posted there on the website. You can go back years. It historically returned 40% or more every year, just with basic swing trades. You don't even have to be near your computer. You could do the whole thing on your phone. Yeah, even I could do it on the phone, and you know how I hate phones. So anyway, where do we go from here? Let's talk about it. I just want to be a little bit more cautious. I don't want to open up the bear case argument right now, but I do want to be a little bit more cautious. And what does cautious mean? It means exactly what I said when I was talking about investing or swing trading. Maybe lighten up a little bit on your longs. Sure, this stuff can go higher, but it only takes a day. It only takes a day or two for this stuff to get knocked in the face, and there goes a big chunk of your gains. For day trading, we've really focused heavily on these check marks. And I'll bring up Peloton here. And this goes into another phase of your strategy. As you know, and I did the webinar, we've been getting check marks, and they've really been working well. And a check mark for you guys new is when the stock sells down into the low, re-rallies, and takes off. And I wonder if there's a couple of these. Yeah, like ZM today. You're coming down in here, and we've seen so many. We've had handfuls and handfuls of stocks to choose from where they just bury themselves down into support, and then they just make it back to high and then go through the high. I think what we're going to see is the pattern will still work, but what I'm talking about being cautious is we have to lower the expectation to think that we might not be getting highs on these types of stocks. Maybe we'll get a bounce, maybe it'll be a quarter of a bounce, half of a bounce. But one of the things that's really important for you guys to understand when you're trading is when you have a strategy, and a lot of people will not tell you this, either they don't know or they fail to mention it. And this is a big thing about you being successful right here. And that is, I ain't got time for phones right now. I'm in the middle of business. Here's what I want to talk about. They don't say these things right here because the market changes itself. Okay, I'm back. I had to take the call. It was important. It was from a higher power. Okay, anyway, I forget where I was, but does it really matter? I mean, does it really matter at this point? Anyway, I think I was talking about these check marks and how we might start getting into this spot where you kind of have to change your approach. And that's what I'm trying to say. When we talk about strategies, there's a lot of stuff out there where people think strategy works in every market. And that's true, but the way that it works and how you are, your flexibility with that strategy changes. So as we go from a risk-on market to a risk-off, maybe we go into this a little bit more volatility, a little bit more aggressive selling here and there, no crashes or something like that. Then you have to take it from an approach of a scalper, where you're looking at just picking up a few bucks here and there. That all remains to be seen. But for right now, until we see something with authority, I'm still a checkmark dip buyer. Facebook, Apple, ZM, Docu, PAYC, Shop, all of those. I still think, even if we roll over, there's scalp money there, there's bounce money there, they will not go straight down, they will not crater, it'll take time, they'll go do it in steps. So I'm still a buyer of that. Now, if we get to the point where there's a little more aggression like we were a couple of months ago, then I'd like to start bringing back these short ideas, doing the reverse check marks where the stocks bounce in the morning and you get them to pull back a little bit or a little bit later. That's something that we haven't seen, and that really just depends on the tone of the market. It's just like I said, this last 50 days has been the most bullish 50 days ever. And when you're going against a trend that's that strong, that Fed fueled, it's difficult. And I've complained about the shorting angle. You got to go on great short setups. They just don't give you enough pull in there. So that's the plan going forward. We don't want to get too aggressive. I think first step is we need to back off of some of our aggression and just keep maybe like one eye open, like sleep with one eye open here. Let's just be a little cautious. We hit these targets. We're pressing up here a little bit. NASDAQ clicked off another high. Let's just watch it. Stuff like ZM right here. It's got to the point where I don't think it's an investment anymore like it was I talked about yesterday. It's more of just a trade for scalps and possibly even entering a swing short on it. I don't know if it's ready to stop now, but that's something that you want to look at, especially when this stock has ripped so much. All of these need a little bit of a rest or some sort of back testing, and that's a good thing. I'm saying that's a good thing because we want them to come back. We want them to set up again so we can trade them and go long. So game plan for tomorrow is if we gap up tomorrow, we get aggressive, I think for me, I'm going to start looking at the short side or entertaining the idea, looking through my watch list, seeing if there's some of these big names up, the Babas, the Deck, Wayfair, and maybe take a look at shorting some of these at the right spots where the risk and reward is favorable. I think if you get a gap up and you get a strong press, then the writing's on the wall here for at least a little bit of sell-off. Again, aggressive dips, heavy selling to the downside, I'd switch that stance and buy those dips because I don't think we're going to see absolute pandemonium, but you never know. It's the stack market, right? So guys, if you need help, make sure you trade with us. Every day the market's open, I'm trading it, man. I'm there, I'm trading it. And thank you for watching Market Mutterings. Like the video. Like the video. Subscribe to the channel. Show you that you want me to keep doing these market mutterings because some of the views, they've kind of tapered off. I want to keep doing this. If you do subscribe, click on the icon button, little bell right there. That way you know when I post a new video. Until tomorrow, guys, trade well. Talk to you then.